dollars are essentially predators for any weaker currency, like all these developing market currencies. And where Bitcoin comes in is a couple different ways. One is if it starts to get more widely adopted and liquid enough that it has less volatility, and the volatility it does have is still in an upward trend in price, and people have seen enough cycles, that's hard to ignore. So that's number one. And another thing to think about, that Bitcoin has to reach certain levels of market size and liquidity before it even interests certain bigger players to get in. So when Bitcoin had $1,000 in daily trading volume, a person couldn't put in $1 million.
Lyn Alden, a renowned investment strategist and financial writer celebrated for her in-depth analysis of economic trends and investment landscapes, explores the intricate realm of Bitcoin and its cycles. Offering her expert perspective on its evolution, volatility, and broader implications for global finance, Alden addresses the significant factor of Bitcoin's volatility. She highlights that this volatility will persist until widespread adoption and liquidity mitigate its impact. Alden draws attention to regions such as Argentina, Nigeria, Lebanon, Turkey, and others where individuals, dealing with unstable local currencies, often seek refuge in storing wealth in physical dollars, gold, or even acquiring property as a tangible asset. In this context, stablecoins emerge as a contemporary solution, providing an alternative avenue to access dollars, albeit in a centralized manner. Furthermore, Alden delves into the macroeconomic aspects, discussing the potential risks associated with rising public debt levels, particularly in developed economies. She suggests that escalating public debt, as seen in Japan with its extensive debt and ongoing quantitative easing, might foreshadow challenges for other economies, including the United States. Alden envisions a scenario where central banks may be compelled to monetize deficits amid high inflation, potentially serving as the tipping point for currencies like the dollar. Daily Dose Crypto Challenge. Win $1,000 of Bitcoin. Simply subscribe to our channel, like this video, comment below how much you think Bitcoin price will be on January 1st, 2024. Winner will be announced January 1st, 2024, 6 p.m. GMT time. Good luck.
But one thing is, I think that what matters for people is how many times they've seen it come and go.
Yeah.
So if you were not aware of like the first 3 cycles, for example, and you knew about it in the 4th cycle, or at least you paid attention to the price, you remember seeing it in a bull market, you remember seeing it in a bear market, you see it in a bull market again. You know, that for them, that's only the 2nd cycle, even if it might be the 5th cycle of Bitcoin. And when you look, of course, if you look at a price chart in linear form, you don't even see those earlier price bumps. So you only ever really have your memory, or in visual form, you see the past couple cycles. So I think people have to go through a handful of cycles, not just that Bitcoin's gone through those cycles, but that they've seen it gone through those cycles. I think that's important. And 2, the volatility is still an issue until it's not, basically until it's widely adopted and liquid enough. And I think there's a couple ways to think about this. So I mean, if you're in Argentina or Nigeria or Lebanon or Turkey or wherever, a general trend in developed markets is that people want dollars. Like I know, like physicians in Egypt that stack physical dollars in their apartment for lack of knowing what else they're going to do with their savings. They might hold some gold, they might hold some physical cash dollars, and then they'll buy a second apartment, which might or may not be empty, just to have something more tangible, right? So, and one of the challenges in these markets is that banks and airports, you can only bring so much cash through an airport. Banks are only willing. Usually, it's hard to get dollars from the banks in these countries. Usually, you have to get it on like the street market, like the gray market or the black market. And stable coins are a way that kind of pierces in there. It gives people another avenue to get dollars. That's why they're somewhat popular now. But of course, the problem is they're still centralized, right? So all that someone is doing with a stable coin is, instead of trusting their local banks to hold their dollars, or not even being allowed to, it's basically just an offshore bank account for the middle class. That's what a stable coin is, and it's centralized, and it's just the central hub is not in their country. Now, so basically, dollars are essentially predators for any weaker currency, like all these developing market currencies. And where Bitcoin comes in is a couple different ways. One is if it starts to get more widely adopted and liquid enough that it has less volatility, and the volatility it does have is still in an upward trend in price, and people have seen enough cycles, that's hard to ignore. So that's number one. And another thing to think about, that Bitcoin has to reach certain levels of market size and liquidity before it even interests certain bigger players to get in. So when Bitcoin had $1,000 in daily trading volume, a person couldn't put in $1 million. When Bitcoin had $1 million in daily trading volume, a billionaire couldn't, you couldn't come in with $1 billion. It wasn't ready for sale yet, for example.
Yeah.
When it trades $1 billion a day, these large pools of capital, like a $1 trillion insurance fund, it's just, they look at that and it's like a small pond for them. It's like they would sneeze at it and it would move the price. When it does tens or hundreds of trillions of dollars in volume, then these bigger players can start looking at it. So it's almost like you have to kind of saturate, or at least you have to hit a certain level before you even get interest from the next level. So now we're at the phase where the BlackRocks of the world are kind of paying attention to it. So one is just, you can keep going up in that one psychological cycle. So people, once a person has directly seen 3 cycles, for example, that's hard to forget. And then 2, that liquidity. And then the other angle, like that's kind of Bitcoin winning. The other way is the dollar losing.
Losing,
like
yeah.
The dollar tripping over itself. So a lot of people here, maybe not everyone, is seeing what happened in the recent bond market move, right? So long end bonds have sold off dramatically in recent weeks and months. The yields are spiking.
In the realm of uncertain fiscal policies, Bitcoin emerges as a potential haven, particularly if major currencies falter. Its resilience demonstrated through multiple cycles positions it as an increasingly attractive store of value in the macroeconomic landscape. Recent data from Egypt's statistics agency CPM reveals a drop in the annual urban consumer price inflation to 34.6% in November, down from October's 35.8%, primarily attributed to a slowdown in the rate of food price increases. This figure slightly surpassed analysts' predictions, who anticipated a reading of 34.8%. On a month-on-month basis, prices rose by 1.3% in November, up from 1% in October, with food prices experiencing a 0.2% increase but surging by 64.5% year-on-year. Against this backdrop, Lyn Alden elucidates the macroeconomic scenario and underscores how Bitcoin may serve as a safeguard in such challenging circumstances.
Whether or not what happens in the next few months or whatever, I think that's not the big story. The big story is that historically, when you get larger and larger debt in an economy, eventually you run into a big bubble. And then what happens is the public sector absorbs that debt onto the public sector. Right? So that's what we saw in Japan over the past 30 years. We saw a gigantic private debt bubble, and then kind of a deleveraging, printing money, and then a lot of that debt is now on the public sector, and the private sector in Japan has less debt relative to other metrics than it used to, less net debt, because a lot of that's now on the public sector. And in the United States, we saw pre-global financial crisis, we saw more and more private debt growth. Then we saw the whole collapse and the money printing. And now we see some degree of household deleveraging and things like that, but all that debt's now on the public level. And then what happens is when you run into the next cycle or the one after that, and all that debt's already on the public level, you're getting higher and higher interest expense. You're not offsetting it with lower and lower interest rates, right? So for example, during the past 40 years in the United States, we had higher and higher public debt to GDP, and we had lower and lower interest rates. So the interest expense on the public debt was never really a problem. But once we hit the point where you hit 0 and you bounce off 0, and now you're just kind of either going sideways or you're going up in interest rates while you're still going up in debt to GDP ratios, that's when you start to get into an outright fiscal spiral. And if the Fed finds itself having to do QE, even when they have above target inflation, because they just have to monetize the deficits, that's kind of a checkmate scenario. We already see Japan in that scenario. So if the dollar trips over itself, and the Fed finds itself in kind of what Japan's doing, but Japan has a trade surplus, current account surplus. They've built up a positive net international investment position. The United States is running a structural trade deficit. And if they also find themselves forced to constantly do QE just to maintain the bond market, and Bitcoin's still here, and people have seen 3 cycles of Bitcoin, I wouldn't want to be short Bitcoin, let's say.
On Monday morning, Bitcoin experienced a notable 7.5% drop, marking its most substantial intraday decline since mid-August. Despite this, the cryptocurrency still maintains an impressive year-to-date increase of over 150%. The abrupt and unexpected downturn, illustrated by a prominent red candle on the charts, serves as a stark reminder of Bitcoin's inherent volatility. Just last week, it appeared that little could impede Bitcoin's upward trajectory, especially with several long-standing industry issues seemingly resolved. To understand why Bitcoin encountered a drop, it's essential to revisit the factors contributing to its earlier ascent. Notably, Binance, the largest and somewhat controversial crypto exchange, agreed to pay a historic $4.3 billion fine to U.S. authorities, ensuring its continued operation. This settlement not only positions Binance to weather the financial penalty but also sheds a positive light on the legal circumstances involving the U.S. Securities and Exchange Commission with other U.S.-based exchanges like Coinbase and Kraken. Furthermore, regulatory uncertainties in the U.S. seem to be easing, with high-ranking legislators proposing industry-related measures, offering a glimpse into potential regulatory developments. Predictable events, such as Bitcoin's scheduled halving next year and the anticipation of the SEC approving a Bitcoin ETF application, have also been driving discussions among market watchers. Additionally, as interest rates managed by the Federal Reserve reach historic highs, some experts speculate that the Fed's efforts to curb inflation and cool the economy may soon conclude, possibly leading to a reversal and lowering of interest rates in the first half of the coming year. Lower interest rates are generally seen as beneficial for Bitcoin, aligning with its positive correlation to economic activity. Share your thoughts on Bitcoin's rapid adoption and whether you believe any factors could potentially lead it back to all-time lows by expressing your opinions in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.